Hello everyone, welcome to EPK Capital. Here we simplify wealth management and investments so you can build wealth for generations. As a bonus, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs, a strategic report on avoidance and compliance. You can download it simply by clicking on the link in the description. Let's get started now. Namaste and welcome back to the channel. If you looked at the markets this morning, you probably thought we were heading for the moon. India's GDP growth just clocked a massive 8.2%, beating every single estimate out there. The Nifty and Sensex blasted to fresh all-time highs right at the open. But if you checked your portfolio by the closing bell, the story might look very different. Today, December 1st, 2025, was a classic case of buy the rumor, sell the news. We saw record-breaking highs in the morning, followed by sharp profit booking that wiped out nearly all the gains. The rupee has hit a historic low, and FIIs are still pressing the sell button. In the next few minutes, I'm going to break down exactly what happened in the last 24 hours. We'll talk about the GDP numbers that shocked the world, the specific levels you need to watch for tomorrow, and why Bitcoin is suddenly taking a breather. Let's dive into the daily market report. Let's start with the numbers. The headline for today is volatility. The markets opened with a massive gap up, cheering the Q2 GDP data. The Nifty 50 hit a brand new all-time high of 26,326 in early trade. The Sensex also scaled a fresh peak, crossing the 86,150 mark. Bank Nifty made history by crossing 60,000 for the first time ever. However, the bears stepped in post-noon. As the day progressed, we saw aggressive profit booking at these higher levels. By the time the closing bell rang, the indices had given up nearly all their gains, sliding over 500 points on the Sensex from the day's high. Closing snapshot, Nifty 50 ended the day trading below the crucial 26,200 mark, essentially flat to negative, erasing the morning surge. Sensex closed in the red, down from that dizzying 86,000 plus height. Bank Nifty, despite the 60,000 milestone, it faced resistance and cooled off significantly by close. The big worry, the Indian Rupee. While stocks were volatile, the currency market was in genuine pain. The Indian Rupee hit a record low of 89.76 against the US dollar today. This is a critical development. Despite our economy growing at 8.2%, the currency is weakening. Why? It comes down to relentless FII selling, which we'll discuss in a moment. It wasn't a bloodbath everywhere. It was a mixed bag. The winners, pharma and healthcare. This was the defensive play of the day. Stocks like Sun Pharma and Dr. Reddy's held their ground. Specific stock star. The star of the day was undoubtedly Walkhart. The stock soared between 12% to 18% today after news broke that the US FDA has accepted its new drug application for its antibiotic, Zanuck. Auto. Tata Motors and Mahindra had a strong start, reacting to the GDP data, which showed good consumption growth. Adani Ports was among the top gainers on the Nifty, showing strength despite the broader market drag. The losers, Realty. The Nifty Realty Index was under pressure, extending losses for the third straight session. IT sector saw profit booking as traders remain cautious ahead of US economic data. Mid-caps and small caps. The broader market was also weak. The advanced decline ratio was negative, meaning more stocks fell today than rose. This indicates that the undercurrent of the market is still nervous. Now let's talk about the macro event of the day, that explosive GDP print. The 8.2% GDP surprise. Data released late Friday showed India's Q2 GDP grew by 8.2%, smashing the consensus estimate of roughly 7.3%. Manufacturing grew at 9.1%, a 6-quarter high. Construction was up 9.6%. Agriculture bounced back to 3.5%. This is rocket fuel for the economy. It confirms that India is the fastest growing major economy in the world. So why did the market fall? The sell on news phenomenon. Markets are forward-looking. The smart money had likely already bought into the market anticipating good numbers. When the news actually hit, they used the liquidity to book profits. The FI problem. The elephant in the room is foreign institutional investors. On Friday alone, FIIs sold over 3,795 crore rupees in the cash market. Year-to-date outflows have crossed $16 billion. Even with 8.2% growth, foreign investors are pulling money out of India to chase the US market or simply de-risk. This capital flight is what is crushing the rupee down to 89.76. Until FIIs turn net buyers, any rally will face stiff resistance. Shifting gears to the global stage, because what happens in Washington affects the Wall Street. Trump's peace comments. U.S. President-elect Donald Trump made headlines in the last 24 hours with comments regarding the Ukraine conflict. Speaking from Air Force One, he expressed optimism about a potential peace deal, stating there's a good chance for a resolution. This is significant. Peace in Europe would likely bring down energy costs and stabilize global supply chains, which is a long-term positive for markets like India that import oil. Executive order rollback. Trump also announced he plans to cancel nearly 92% of the executive orders signed by President Biden, claiming they were signed via AutoPen and are invalid. While this is more US-centric, it signals that his administration is going to be aggressive in deregulation. The markets love deregulation, but they hate uncertainty, so this is a double-edged sword to watch. Oil and OPEC+. OPEC Plus decided yesterday to delay their planned oil production hike for another 3 months. They are keeping supply tight to support prices. Brent crude is hovering near $72 to $73. Impact on India. Normally, production cuts spike prices, but demand from China is so weak that oil isn't rallying hard. This is good for us. A stable oil price below $75 is a Goldilocks scenario for the Indian economy. For my crypto investors watching, it's been a rough 24 hours. Bitcoin has corrected sharply, falling below the $88,000 level, and even testing $85,000 zones in some exchanges. Why the drop? It's largely a technical correction. After the massive run-up post-election, the market was over-leveraged. We are seeing a leverage flush where long positions are getting liquidated. Altcoins. Ethereum and majors like Solana are down 5 to 8% in sympathy. The narrative. The long-term bullish story hasn't changed, but in the short term, the market is cooling off. Support for Bitcoin is seen around $85,000. If that breaks, we could see $82,000. To wrap this up, here is your game plan for tomorrow, Tuesday morning. Watch the FII data. Later tonight, check the final FII figures for today. If they sold heavily again, the Nifty will struggle to cross 26,300 again. Rupee watch. If the rupee weakens past 90, it will put massive pressure on the RBI to intervene, which can make equity markets nervous. US PMI data. Tonight, the US releases its manufacturing PMI data. A strong number there could strengthen the dollar further, which is bad for emerging markets like India. Key levels. Nifty support. 26,000 is the line in the sand. We need to hold this. Nifty resistance. 26,350 is now a formidable wall. Final thought. Don't get carried away by the 8.2% GDP headline alone. The market has already priced it in. The trend right now is sell on rise. Be cautious with fresh longs until we see FII selling stop. If you found this analysis helpful, please hit that like button. It really helps the algorithm. Subscribe so you don't miss tomorrow's update. I'll see you in the next video. Stay prudent and happy investing.